Hello everybody, this is Lara with your weekly video for Bitcoin for the week beginning Monday 7th of November 2022. Last week, Bitcoin effected an upward breakout above short-term resistance and then it curved around and had a test of support. Today, there's another pullback to test again the same area of support, which I expect is still likely to hold. My Elliott wave count, the main Elliott wave count, still expects that Bitcoin is in the very early stages of a third wave at two very large degrees. It is an extremely bullish Elliott wave count. I do still have an alternate that allows for a little bit more downward movement before the bear market is over. It is judged to have a lower probability, but for those of you who have a bearish bias, I do provide an Elliott wave count to show you what it would look like, and then I judge the probability. After the month of October is complete, it's time to step back and have a look again at the bigger picture. This is a monthly chart with the full price history of Bitcoin back from its beginning in 2010. From this low to this high, there is an absolutely perfect 5-wave impulse. Now remember, this is on a semi-log scale, so the third wave is a lot longer than the first, but it doesn't look like it with the scale. That's the arithmetic difference between highs and lows that is important in order for target calculation and obviously for profit. That's how you make money. From this low to this high, this is a perfect impulse. I am labeling it primary 1, 2 a zigzag, 3 is longer than 1 and stronger than 1, 4 a time-consuming triangle, and 5 is longer than 3 as well. I've got a bunch of notations on this chart because I'm using previous price history and behaviour to indicate what the future may be. We'll expect it to be same, different. And all we have to go on to try and predict the future is what it's done in the past. So here, primary wave 3 exhibits no Fibonacci ratio to 1. Primary 3 was 38.87 times the length of primary 1. That is an extremely long third wave. Bitcoin does tend to have very long third waves. There's perfect alternation between the triangle of 4 and the zigzag of 2. Here, the shortest, strongest portion of primary 4 over in just 3 months was a 91% correction of primary 3. Primary wave 2 over in a few months with a 94% correction of primary wave 1. Bitcoin's bear markets tend to be relatively quick and very, very deep. These are extremely deep corrections. After primary 4 completed a big sideways triangle lasting many months, primary wave 5 is longer than primary 3. Primary 5 is 15.87 times the length of primary 3, and it's 616.7 times the length of primary wave 1. This is an extremely long and strong fifth wave. There is no Fibonacci ratio between primary waves 3 and 5. After cycle wave 1 is a complete 5-wave impulse lasting 7 years and 2 months. Cycle wave 2 is a very deep zigzag. It's an 84% correction of cycle wave 1 and it lasted a year. The duration of this correction compared to the strongest portion of this and the duration of this big correction here indicates, because it's so much longer lasting, that it should be a larger degree than this portion and this portion, and so that's one reason why I'm labeling a 5-wave impulse over here and a second wave correction over here. Cycle wave 1 lasting 7 years and 2 months, that's a normal expectation in terms of duration for a cycle degree wave, and cycle 2 lasting 1 year, again a normal expectation for the duration of a cycle degree wave. This degree of labeling with cycle 1 and 2 looks correct. And so if we're all correct up to there, then if 2 is over here, then cycle wave 3 should have begun here back at 3191.3035. From this low to this high, this upward movement looks like a really good looking 5-wave impulse, and now I think this subdivides best as a double zigzag. Primary 2 looks likely to be over down here. But if primary 2 continues lower, and it could continue a little bit lower, it may not move beyond the start of 1 below 3191.3035. That's the bottom line for my analysis at all time frames. If we do see a new low below this point back here just a few months ago, this is the invalidation point. I do not expect this to be breached. I've taken a stab at some target calculations for cycle wave 3. The first calculation is for it to reach 11.09 times the length of cycle 1 at 223535. That target, if it's wrong, is likely to be woefully inadequate, far too low. If cycle 3 reaches 38.87 times the length of cycle 1, it would end at 775540. That is not a Fibonacci ratio. That's the length of primary 3 to primary 1 within cycle 1. So here, this third wave was 38.87, the length of this first wave. If this third wave exhibits that same ratio to this first wave, then that's a reasonable target expectation. Here's a more extreme Fibonacci ratio. Cycle 3 could reach 46.979 times the length of cycle 1 at 936671. These targets are highly provisional. You can see from my notations here that neither primary 3 nor primary 5 exhibit Fibonacci ratios. Within cycle 1, there are very few Fibonacci ratios, so it makes target calculation virtually impossible. So these are highly provisional. These are just a general stab at some possible targets. I'm also taking a stab at some possible durations. Cycle wave 1 lasted 7 years and 2 months. If cycle 3 lasts a Fibonacci 8 years, so it's a bit longer lasting than 1, it could end in December 2026. If it reaches equality in duration with 1, it could end in February 2026. Let's take a look at the first weekly chart, where this low here of cycle 2 is this point down here. From this low to this high, my main wave count will see primary wave 1 over here with intermediate 1, 2, 3, 4, 5. It's really common for Bitcoin and other cryptocurrencies to exhibit fourth waves which are more brief than their counterpart second waves. Here is a good example. Intermediate 1 has a typical curved look. Bitcoin and other cryptocurrencies exhibit impulses that have this very typical curved look. They do that because the fifth wave is the strongest portion of the impulse, and it causes the fourth wave that comes just before it. It pulls it up in the direction of the larger trend and causes it to be more brief and usually more shallow than it would otherwise be. And so it's common for the fourth wave to be more brief than its counterpart second wave, and quite unusual for it to be the opposite. Here, intermediate 4 is 10 weeks in duration, intermediate 2, 37 weeks in duration. That is absolutely normal and common behaviour for this market. That's why I see primary wave 1 most likely over here. Primary wave 1 was a year in duration, 52 weeks. Primary 2, quite likely to be over, 32 weeks in duration. When you look back on that monthly chart of the duration of the corrections following the impulses, they do tend to be quicker than the impulses. So it would be absolutely normal if it was over here. If primary 2 is over here, then Bitcoin should be in the early stages of a primary degree third wave within a cycle degree third wave. That is a long, strong movement expected. But Bitcoin tends to start its impulses slowly, accelerate through the middle, and explode at the end. Starts slowly, accelerates through the middle, and explodes at the end. That's absolutely normal behaviour. When we look back at the price history of its behaviour following lows which have been sustained to this date, it is really normal for quite a lot of slow sideways movement as it moves slowly off its low. Draw a channel around primary 2 from its start to this high labelled intermediate X. Place a parallel copy on this low labelled intermediate W. This lower edge broken through, provided resistance, broken through to the price moves back in the middle of the channel. Test of support here, nearly here again, now starting to move, now in the midway in the channel. If this channel is breached by a full daily chart above and not touching this trend line, that's how I define a proper breach. If that happens, I will have a lot of confidence in this main wave count. I will then bring the invalidation point all the way up to here and have a lot of confidence that Bitcoin is in the early stages still of primary 3 within cycle 3. While price has not breached this trend line and remains within the channel, this is the expectation in case price does move a little bit lower. It would be normal for primary 2, if it were to continue lower, to end somewhere from 80 to 90% the depth or length of primary wave 1, giving us a normal range for a bear market for Bitcoin from 16,310.97 to 9,751.14. At the daily chart level, this low here which is most likely the end of primary 2, this point here fits as a double zigzag. From this low to this high, the first wave up fits beautifully as a leading contracting diagonal. It is followed by a very, very deep double zigzag for minor wave 2. It is very common for a second wave correction following a first wave leading diagonal to be extremely deep, and it's also common for Bitcoin early in its new bull runs to have deep second wave corrections. We see it repeatedly over and over in the price history. It's behaving absolutely in a normal way for this market. If minor 2 is over there, then minor 3 has begun with a series of 1, 2, 3 and now 4 overlapping first and second waves. This wave count expects momentum to start to show an increase. It is starting a little bit to show a little bit of an increase. It expects a continuation of that increase as price moves through the middle of a third wave and then explodes at the end of the third wave. Look out for any one or more of sub-minuet 5, minuet 5 or minute 5 to end minor 3 could exhibit strong upward movement. But Bitcoin tends to start out slowly, doesn't show acceleration until the middle, and then explodes at the end. So this early on in minor wave 3, it's absolutely normal to not see a strong increase in momentum yet. We are starting to see a curve and starting to see a little bit of an increase in slope. Here's a minimum expectation for primary 3. This is not a target. When we look back at Bitcoin's price history with a full Elliott wave count, which I have done at the daily chart level, we can see the shortest third wave of a large degree in its history was only 5.71 the length of its first wave. If primary 3 reaches as short as previous third waves of large degrees have reached in Bitcoin's price history, then it may end at 392,275. The longest was over 50 times the length of its first wave. If primary 3 is over 50 times the length of primary 1, it would reach over 3.3 million. So there's an enormous variety and potential areas where primary 3 could end. This is not a target. At the daily chart level, this is the bearish alternate wave count. I need to pop back quickly to the weekly chart. If primary 2 is a single zigzag, we could label it A, B, and then 1, 2, 3, 4, 5. But 4 would be a lot longer lasting than 1. In fact, 4 would be, I think, over 3 times the duration of 1. That reduces the probability of this wave count to an alternate. Also, 4 fits quite nicely as a triple zigzag. That further reduces the probability of this alternate, because triple zigzags, while not rare, are rather uncommon structures. So the probability of this wave count is judged to be low, but low probability does not mean no probability. Sometimes low probability outcomes do occur, and when they do occur, they are never what you expected as most likely. That's how probability works. So the best we can do is outline different potential scenarios and then look at classic technical analysis and Elliott wave structure and rank them in order of probability. That's what I'm trying to do here for you. If minor 4 is over there, then minor 5 should continue lower. Minor 3 was shorter than minor 1 by 7,130.557. Minor 3 may not be the shortest out of 1, 3 and 5. That's a core Elliott wave rule. When the third wave is shorter than the first wave, that tells us the fifth wave is limited to no longer than equality in length with the third. In this instance, that limit is at 10,594.35. So if my Elliott wave count, primary 2 is a single zigzag, is correct, and if we see a new low below this point, 17,708.623, we can invalidate the main count and then would use this alternate. If that happens, this is a target for support, and I would not expect a new low below this limit. This is the absolute limit that I would expect. At 12,417, intermediate C would reach equality in length with intermediate A. Within minor 5, minute 1 and 2 may be complete, minuet 1 complete here, minuet 2 moving higher as a zigzag, should be over here, but if it continues higher, it may not move beyond the start of 1 above 22,673.82. To the upside, if we see a new high by any amount at any time frame, a fraction of a cent on a tick chart is enough to invalidate this wave count, because Elliott wave works with highs and lows, not opens and closes. It's a really important distinction between Elliott wave and other classic technical analysis methods. So a new high above here invalidates the alternate, which adds confidence to the main wave count, and vice versa. If the main count is invalidated, that adds confidence to this alternate. That's how one way to work with Elliott wave counts, and it's even if your alternate wave count has a low probability, the invalidation point also gives you some information. It gives you a price point beyond which you can have even more confidence in your main wave count. So if for no other reason, it's worthwhile giving or preparing alternate wave counts. This is another wave count which I see is quite common out there among other Elliottians. It's also possible that primary 1 could be incomplete with intermediate 1, 2, 3, 4, 5. This is an alternate wave count. I judge it to have a lower probability than my main wave count, mostly now because intermediate 4 is 61 weeks in duration. It's 1.5 times the duration of intermediate 2 at 37 weeks. Now remember, it's really normal for cryptocurrencies to exhibit fourth waves that are more brief than their counterparts' second waves. It's not unheard of for a fourth wave to be longer lasting than a second wave. We can find a few examples of that in the price history with a full Elliott wave count. It's just much more common for it to be the other way around. So again, this is an exercise in probability. Given past price behavior of this market, this is not the most common scenario. The main wave count is the most common scenario. We have to judge this to have a lower probability. There's no difference in terms of direction expected for upward movement. I still expect intermediate 5 to move beyond the end of 3, probably by a reasonable substantial amount. And if it exhibits a little bit of weakness, then this could turn out to be the right wave count. When primary 1 is over, that's when this wave count will then diverge from the main wave count. It would then expect a huge bear market for primary 2, probably to last at least a year. We are not there yet. At the monthly chart level, this strong downward month came with some increase in volume. That's happened before. It happened before at this sustained low. We did see an increase in volume for this red candlestick, however, and this downward month here showed even stronger volume than this low. However, this low back here in 2015 has been sustained to this day. This is under $300 back down here. Another low which has been sustained to this day, a downward month with an increase in volume. Bitcoin's bear markets tend to end with some strength, particularly with volume. Again, a downward month, an increase in volume here. A downward month, an increase in volume. We have an increase in volume here for the last completed downward month. It's stronger than this month. We've seen that happen before. Here and here compared to here. It's happened again here. There is precedent for this, and yet this low has been sustained to this day. So just because we see an increase in volume for this downward month doesn't mean we have to see new lows. That's what I'm trying to point out here. It's absolutely normal for Bitcoin to have some sideways movement after a sustained low. Some sideways movement after a sustained low. Sideways movement after a sustained low. Absolutely normal behavior. Support about 18,000 continues to hold. Price is still consolidating. It's normal to see Bitcoin start out slowly, accelerate through the middle, explode at the end. Starts out a bit slowly, accelerates through the middle, explodes at the end. Starts slowly, accelerate through the middle, and explode at the end. Absolutely normal behavior. A slow start tests our patience and our resolve and makes us question, do we have our analysis in the Elliott wave count correct? That's another reason why I'm providing you with that bearish alternate. Absolutely possible. The crossover of the 12-month moving average crossing below the 24-month moving average, that's happened before. and yet this low has been sustained to this day. On balance volume, last time I looked at the monthly chart, looked like it could be breaking below support. It moved back above, so I've slightly adjusted the support line. On balance volume remains constrained, no signal. ADX is declining, the negative DX lines crossed above the positive, but the ADX line still declining indicates no clear trend. A potential change to down. That's the first time this has happened in Bitcoin's price history. You know, for the Elliott wave count at the start of primary 3, of cycle 3, this is not to be unexpected. This is probably quite a normal look. I expect with further sideways movement as it starts slowly in a new trend, we're probably going to see the ADX line continue to decline, and it may even be able to move back below both DX lines. If it does that, we're going to be setting up for a really strong upward trend. Not there yet, I'll keep an eye on that in coming months. RSI in neutral territory, as is money flow, and stochastics is oversold. Both RSI and money flow at the high exhibited some strong bearish divergence at the monthly chart level. At the weekly chart level, there's some bullish divergence between these lows on a closing basis for the weekly chart between price and RSI and money flow index. At the weekly chart level, this is the first time in Bitcoin's price history that RSI has reached oversold. It'll reach overbought quite strongly with a bull run and can stay there for a long time and get extremely overbought, but this is the first time it's reached oversold, so that's really bullish. This is the most extreme downward trend that we have seen for Bitcoin, and given the Elliott wave count, a second wave at primary degree within a third wave at cycle degree, that absolutely fits and makes sense. I would expect things to be pretty extreme at the start of a big third wave to the downside. I would expect the downside conditions, to be very extreme at the start of a third wave upwards, is what I'm trying to say. Within this little bit of upward movement, starting to see a little bit of an increase in range for this session, for this last completed week with some push from volume. Volume remains heavy for the last completed week, another upward week with a smaller real body to this candlestick, but volume remains heavy. It's above the 50-week moving average. Slight decline from the previous week though. On balance volume gives us a reasonable bullish signal. It's broke above resistance, which has got 4 tests and somewhat, not long held, but a reasonable period of time, and it's close to horizontal, so this is a reasonable bullish signal. I much prefer to use on balance volume with trend lines and breakouts than I do with divergence. For divergence, I'd much rather look at money flow and RSI. It tends to be a lot more reliable than on balance volume divergence. ADX at the weekly chart level is still declining, no clear trend at this time frame. It still remains above both DX lines. It hasn't yet come right down to set up for a really strong trend yet. And price is still consolidating. Resistance remains about 24,500, support about 18,500. While price is consolidating, stochastics has reached oversold. It's back in neutral territory. Let's expect overall an upward swing again to resistance about 24,500. Stochastics didn't reach overbought back up here, and for this little upward swing, stochastics barely reached the midline. It's a little bit higher now. Let's look for stochastics to reach the midline, and if price gets up to resistance about there, we may possibly see a downward swing before a breakout. There's this bullish divergence between price and money flow and price and RSI at these lows from price on a closing basis at the weekly chart level. ATR continues to decline as price moves sideways. That's normal behavior in the early stages of a bullish run for Bitcoin. It's normal behavior for pretty much any market while price is consolidating. At the daily chart level, there was a breakout here on the 25th of October on an upward session with push from volume. It broke above what was resistance, about 20,200. A curve, a test of support, moving up and away. Another test of support in about the same area is being affected today. Again, a push from volume pushing price lower. This downward movement here ended with strong volume, so just because volume is increasing does not mean price has to continue lower. It's really normal to see Bitcoin's bearish moves end on strong volume. Next resistance 21,400, higher resistance above that, and very important, 24,500. On-balance volume at the daily chart level is within a weak range. There is no signal here. I have noted and made in comments under posts for members that on-balance volume has been exhibiting divergence, and again, I prefer to use RSI money flow for divergence than on-balance volume. No signal this week from on-balance volume. ADX declining today, indicating no clear trend, but it really isn't going to take much to turn ADX back up. If it does, it'll indicate an upward trend because the positive DX line is above the negative. RSI neutral, money flow neutral after exhibiting this good bullish divergence. Stochastics returning to neutral, ATR flat as price consolidates is normal behaviour for any market. That's it from me with your Bitcoin analysis this week. I hope everyone had an awesome weekend.